All right, good morning, Lagos. Good morning, everyone. This is Follow the Money brought to you by Nairametrics. I remain Ubudre. Yeah, so we do this every Monday, 8 to 8:30 on the station. Of course, you can catch previous episodes on any of your favorite podcast platforms, whether it's Spotify, Apple Music, Google Podcasts, or whatever it is that you like to listen to podcasts, or even on YouTube. Probably catch me, not live though, but I mean recorded version of this with me in the studio on our YouTube channel. Of course, there's several other YouTube programs that we have, on our YouTube channel, Nairametrics. Just search for Nairametrics on YouTube. Follow, subscribe, and hit the notification button. Yeah, this show, of course, is proudly sponsored by United Bank for Africa. So, in case you're not aware, they have an offer on at the moment. So, you do want to pick up your own shares of UBA. I did mention a couple of weeks ago that from what we've seen, bank stocks tend to do well after a public offers. I don't know why, but tends to do well. And all we do here is follow the money. All right, so we start with the weekly wrap. So the all share index rose by 106 points, largely on the back of penny stocks. And the market closed the trading week of November 22nd, 2024 on a positive note, with the all share index gaining 106 points to finish at 97,829, still below that psychological 100,000 mark that I tend to always mention. However, this was a 0.11% gain week on week compared to 97,000 the week before. Of course, volumes, the stocks that were traded during the week also inched up a little bit with 1.9 billion shares traded, which was not actually little, substantial, 1% higher than what we had the week before. So a lot more shares were traded last week compared to the week before. The market showed a mixed but mostly positive performance across several sectors during the week, boosted by 31% increase in trading volume, like I mentioned. Kind of mixed picture, by the way. We had 42 stocks gaining during the week compared to 39 stocks the week before. Did any of the stocks in your portfolio join this trend? Anyway, for two stocks gain. Of course, in terms of decliners, we have 24 stocks that lost positions last week compared to 46 losers the previous week. So pretty much cool week for a lot of stocks, or for anyone who has Nigerian stock portfolio last week, because we had a lot less decliners than those that did worse. In terms of the sub indexes, the premium index gained 0.23%. That's the index of the big boys. And of course, the NGX 30 and mainboard indexes all also rose 0.05% and 0.03% respectively, suggesting that the market was basically bullish all through. Of course, we now go deep down into the Nigerian Insurance Index, which soared by 4.1%, driven by double-digit gains with the likes of Guinea Insurance, Sun Insurance, and Mansard. By the way, at some point in the show, I'm going to be giving you my watch list stocks on my radar, and I'm going to be looking at insurance stocks. I've got 4 insurance stocks that I'm circling on and kind of currently looking at, and you might want to check those stocks as well. Just pay attention to the end of the show and you get those stocks. Of course, the NGX Consumer Index also rose 2.2%, basically driven by interesting rally in Cadbury stock. Yeah, Cadbury stock, one of the major gainers last week. Unilever as well did gain. I'm going to speak a little bit to Unilever at some point in this show as well. Other sectors followed suit with the likes of the Industrial Index. That's where you have the big boys as well, like Dangote Cement and Lafarge. They also grew by 1%, while the Oil and Gas Index grew 0.25%. On the flip side, the banking index declined by 2%. I still got my money on banking stocks, by the way, but they declined by 2%, dragged down by losses of over 4% in FBN Holdings. That's the parent company for First Bank, Sterling Bank, and Stanbic IBTC. One of the stocks is actually on my watch list for this week. That one I would mention at some point. Yeah. Okay, so who are the top gainers during the week? Now you want to check which of your stocks fell into this bucket, right? So bring out your pen and paper. So which one fell into the bucket? Which stocks do you have in your portfolio that probably gained last week? So of course we start from the bottom and go all the way to the top. So Better Glass gained 9.4%. This actually should be one of my favorite stock, Better Glass. Like one of those companies that manufacture bottles, like what you use to bottle drinks and and cans and all that. So that's what they do, and glass making company, and they have been pretty much consistent over the years, always delivering profitability growth, except for when we do have recessions or when the economy is pretty bad. But it seems like they're doing not badly this year so far. But the stock share price gained 9% to 49.6 naira per share. Mansard, another insurance company, I did mention them earlier, they were up 13.3% last week. So looks like some love is going to Mansard. Suno Insurance also up 16%. And of course, Dangote Sugar, pretty beating up stock for some time now because of a string of poor results, driven largely by a poor economy. But looks like it got a resurgence during the week, gaining 16% in 1 week, guys. And this is one stock that has a lot of float. So it's not one of those stocks that when you buy, you start looking for how to sell it. But I mean, it has a lot of float, so you can actually buy and sell the stocks easily. So it did gain 16% in 1 week. For those who think the stock market is not one of those markets that you only get into and all that, I don't want to time that money down. See, you can sit 16% in 1 week. Where else are you going to get that kind of return? Nowhere else. You're not even going to get it in fixed income, right? Even crypto self, I mean, you know now, can't even get that much in crypto. So Nigerian stocks are doing pretty well. So Dangote Sugar up 16.6%. Prestige Insurance, looks like the insurance sector dominated gains last week, up 18.75% during the week. Unilever up 20.8% to close at 29.6%. Guinea Insurance, another insurance company, like I told you guys, insurance company seems to be dominating. They gained 22% to close at 55 kobo, while Cadbury did 22.41% to close at 21.3 naira. Cadbury is another consumer goods stocks that have struggled this year, but it seems like investors might be loving something and makes Cadbury want to get into my radar. Let me try and zero in and figure out what the heck is going on. Why are investors giving it some 22% gain in 1 week? And of course, leading the top two, Lafarge, cement company, one of the major cement companies in Nigeria, got some love, grew 28.5%. I'm going to try and break down why that happened or what is driving that that sort of gain last week. And of course, John Holt, the penny stock of life. That has been one of the quintessential penny stocks that you have in Nigeria. If you're thinking of penny stock, that's stocks that usually trade below 1 naira or thereabout. I mean, they traditionally call penny stocks, even though penny is not what we spend here, but I mean, globally is recognized as penny stock. Gained 42.49% last week alone. I'm not telling you to buy that stock. I'm not saying that that is something good to buy, but I mean, it gained 40 something percent last week. There are people who love to trade penny stocks, by the way, because of how quickly the share prices can appreciate. But at the same time, share prices can also depreciate with penny stocks. Yep. All right. So in terms of losers, so of course we're going to start with the bottom and go all the way to the top. So the largest loser during the week was Multiverse. Multiverse plunged 17.61%, and PZ Cussons also plunged as well by 11.6%, same as University Press. RT Briscoe fell 9% during the week, while FBN Holdings was down 7.9% as well. Berger Paints come in with a 7.71% slight. They closed at 17.35. Presco, one of my favorite stocks out there, down 7.29% to close at 450 naira per share. While Sterling Bank also down 5.6% to close at 4 naira 71 kobo per share. One of the lowest trading banking stocks in terms of share price. Yeah, Sterling Bank at 4 naira 71 kobo per share. While Veritas Capital also down 5.8%. And Stanbic, ironically, conversely, one of the highest trading stocks per share, closed down 5% to 55 naira per share. All right, so there were a few announcements here and there. Champion Breweries said they were going to have an extraordinary general meeting. Also, Savings and Loans releases unaudited financial accounts. Conor also passed some interesting resolutions at his last AGM or his 54th AGM. So, what's the outlook this week? Kind of looks like you're going to see a lot more trading activity from banking stocks. Expect to see some seesaw moves for some banks. Like I mentioned, I have a couple of banks on my radar that I already, likely going to take some positions in. I think that those banking stocks are likely to do well. Some of them are the food gas stocks. Always a good bet on them. They always tend to come through at some point. We're at the stage of the year where it's pretty much time to start to take some kind of positions in some stocks. Now, why do you want to take positions in the stocks? You want to take positions because you're pretty assured that a lot of these companies are likely going to do well come the end of the year. And so dividends starts to be discussed around February, March. And that is when shares tend to take off. And of course, you're going to have a new Trump presidency coming in January. And that could just be a moral booster to global stocks, assuming interest rates continue to drop in the US. And so those are some of the positive tailwinds that we're seeing that could drive Nigerian stock market. So as much as you've seen a lot of gains this year for Nigerian stocks, it's very likely that those gains could continue into the new year. And so perhaps maybe the best time to take position is now, so that when it comes into the new year, you're just waiting for stocks to kind of take off, and then you can make your grand exit with your grand profits. A lot of people who are smiling to the bank now, who invested in crypto, did so probably a year ago or even 2 years ago. So sometimes you just don't have to wait for the wave to come. You just plan it. You just plant that investment in there, and then when the wave comes, you just ride it, and then you exit when you do want to exit. All right, so we'll go into the next story here is dividend tracker. Yeah, so at Nairametrics, we did launch a dividend tracker during the week last week. So what it means is that if you want to check any stock in Nigeria and their dividend, per share, and when they're going to pay that dividend, how much they're going to pay, who qualifies to be paid the dividend, and even when they're going to have their AGM dates, that kind of information. We put everything together in a new portal that we created. You can easily get to that portal by just type in dividends.nairametrics.com. Again, dividends.nairametrics.com. So if you just go there, you can check dividends, not just for the ones being released this year. You can even get the ones that were released last year, 2022, 2021. So we go all the way back as well, so that you can compare dividend payments. And it's very easy to use tracker. You can sort, you can search by different terms. You can even search by dividend per share or by dates. So kind of make it easy for you guys to track your dividend at any point in time. Again, dividends.nairametrics.com, and it is actually free to search, right? I mean, don't get a lot of freebies these days, but we're pretty much proud of what we've done there. So you might want to check that out. So we're going to take a short break, and when we're back, we're going to talk about Lafarge. What is driving Lafarge share price, as much as also what is driving the share price of Unilever, and I'm going to close with my stocks on my radar. Be right back. All right, we're back. This is Follow the Money, brought to you by Nairametrics in partnership with UBA. I remain Ugo Dre. Of course, UBA is currently raising 239 billion via a rights issue at a modest 35 naira per share. Yep, so at 35 naira per share, you can get the stock, and it's just a right issue. So that means it's only for shareholders of existing shareholders of UBA. So you must already have a UBA stock as a certain date. Not just if you go and buy it now, and you won't be able to get the right issue. So it is only for shareholders who had bought the shares before November 5th, 2024. And so it's basically one new ordinary share for every five shares existing. That so you had 5 shares before, we're able to give you one extra in right issue, kind of like 20%. Basically, is what UBA is doing for their right issue. So 20% more. So if you got 100, you're probably going to be able to buy 20 more shares as your right. You don't have to take that right. If you don't take it, somebody else is likely going to take it. And so rights are basically an opportunity for you to ensure that you don't get diluted in a stock that you own. All right, so we're back, and I said I was going to talk about Lafarge shares. So Lafarge, which is essentially one of the 3 largest cement companies in Nigeria. Of course, the other 2 is Dangote Cement and Boa Cement. Lafarge used to be the largest, by the way. At some point, they were called WAPCO before there was a merger across Africa several years back, and then it became Lafarge Africa, which is also majority owned by the French company Lafarge Holcim. But shares has been trading for a bit in the Nigerian Stock Exchange, and they're getting some love lately. So the share price has soared 31% month to date. That is this month alone, 31%, and this is at like November 20th or thereabouts, and year-to-date performance is now up 60%. So the stock has gained a whopping 60% this year alone. So if you put 1 million in Lafarge as at the beginning of this year, that 1 million is probably worth 1.6 million now. So tell me, what investment beats that in Nigeria? Which one? Tell me, what investment? What, fixed income? Treasury bills? What? Fixed deposit? I don't know what beats this. Even crypto will struggle with this. So 60% return this year alone. And of course, there has been a major rally towards the last few days. 60% year to date, but half of it was probably mostly in November. And that rally was driven mostly by a surge in Lafarge's fundamentals. Their revenue grew, pre-tax profit for the quarter was about 47 billion, which was about 7 times, or 717% actually, year-on-year increase from the 5 billion that it did the same period last year. So 9 months profit, pre-tax profit for Lafarge is 94 billion. So outstanding results, and investors are loving it already. Now, why do investors love stocks that produce like this? I mean, for obvious reasons, because it does mean that your earnings per share is likely going to be higher. Remember, I explained sometime what price to earnings ratio means. So price to earnings ratio is basically how you know whether a stock is expensive or cheap. So it's essentially dividing the current share price by the earnings per share. So the larger your earnings per share, which is the denominator, then the lower the price to earnings ratio is, which suggests that the stock is cheap. And so I think with this sort of profit, investors suddenly just realize Lafarge might just be a cheap stock, so, and that's why they're putting in a lot of money in there. And the share price has gained massively, during the week. The CEO also tried to, speak about the performance, and let me just try and explain what the CEO says. So is Lulu Alade Akiemi, and what did he say? He said we achieved strong top line growth of 0.1% in Q3 and 66% for the 9 months ended September 2024. He further added, profit after tax improved, driven by operational efficiency despite heightened cost pressures. Our results were supported by strong outputs from improved plant stability, enhancement in supply chain operations, and our ongoing cost management initiatives. When CEOs start to speak all this big grammar, you try to break it down. Essentially, you're saying their plants ran efficiently, which means they were able to meet a lot of their production timelines, probably able to produce cement more efficiently, and of course, supply chain, distribution means they were able to also get to, further markets. They were able to push their products well across markets, across all their retail distributors. Everyone got products on time, so they're able to compete very well in the market. And of course, they also continued with their cost management. See, there it is. Very simple. That has been the trick according to Lafarge. And that is why uh, investors seem to be rewarding this with a share price growth of 30 something percent last week alone. Is it going to keep up this momentum for this week? We'll wait and see. But it looks like the train has left the station for Lafarge. So for those who might want to get in there, you might want to wait a little bit and see if there might be some pullback. Pullback is maybe when those who have already made money from it decide to take profits, and then maybe the share price could fall a little bit. But for now, it looks like it's out of reach for some people. Unilever was another company that did well during the week. Over 28 or close to 30% gain week on week. Compared to maybe some stocks that haven't even gained 10% in the whole year. But this one's gained 28% week on week. Year-to-date performance for the stock is 95%, which means the stock has gained 95% this year alone. So if you put 1 million naira there, you're probably up 950,000 naira, which means you already have 1.9 million. So when people are saying, I don't know what to invest in, this economy is hard, blah, 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 that's it. People are essentially cleaning out investing by picking the right stocks. And we say this every day here. That's what we do on this show. We follow the money, and we just continue to bring to you investment opportunities, especially in the Nigerian stock market. So what was driving Unilever's performance? It was the Q3 numbers again. Q3 numbers announced in October. That was announced in October. So just the company's pre-tax profits was up 13.9 billion for the 9-month period ending in September 30, reflecting a 31% year-on-year increase. Unilever also reported a 49% year-on-year growth in revenue, up from 71% in the same period. So what are the likely drivers for Unilever? Again, we did read out what their managing director, Tim Kinberlin, said. He said the consistency, I beg your pardon, in our quarter-on-quarter growth, sustained performance is a clear testament to our commitment under the Growth Action Plan, which essentially is the plan or the strategy underpinning what Unilever is going to be doing over the course of the next few years. And it goes on and says, remain dedicated to serving consumers with our top brands, ensuring they meet their daily needs for improved health and hygiene. Unilever is pleased with the progress we've achieved, driven by focus on blah, 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 blah. But essentially, the key thing here is saying is the operational efficiency, cost optimization, and of course, having a good brand and market share out there. The one last problem I have with some of the CEOs, why don't you just come out and essentially just tell us what you're doing right? You just don't have to come and just sound like politicians. Nigerian CEOs sometimes tend to sound like politicians. Like, this is not politics, man. This is people's investment, people's money. So tell us what exactly you were doing. Like, speak the right English. I guess you probably have to tell your PR managers. PR managers tend to do that a lot. Sound like they are politicians. Nigeria is so politicized, my God. You guys are business guys, man. Come on, like, explain what exactly you're doing right. Anyway, from what we've seen, the company reported a 7% year-on-year growth in half-year pre-tax profit for June, which increasing to 6.3 billion in 2024 from 5.9 billion in 2023. So it appears the Q3 result that the company released may have been the major driver for the share price surge, because as a half year they weren't doing that well. They were doing okay, but just okay. But by the time they released their Q3 numbers in late October, we started seeing this share price surge for Unilever shares. So for Unilever shareholders, you should be smiling to the bank now. One of the best performing stocks this year so far, despite the challenges that they had last year. Seems like they're gradually getting out of it and now posting impressive numbers. All right, so I said I was going to talk about the stocks on my radar. So on my radar this week are insurance stocks. I haven't gotten into insurance stocks in a while, and I think that insurance stocks have been getting some joy this year. I did mention that last week alone we saw like 3 or 4 insurance stocks among the top 10 performing stocks for the week, and it looks like insurance stocks appear to provide some kind of investment opportunity out there. So I have 5 insurance stocks that I tend to have in my radar, like on my watch list. The first one is NEM Insurance. NEM Insurance closed the week at 8 naira 35 kobo per share, and of course, this is one of the largest insurance companies in Nigeria, one of the oldest, by the way. And NEM has a market cap of about 41.9 or 42 billion naira. Earnings per share at 5 naira 35 kobo per share, and of course, price to earnings ratio is 1.5x. Now, what did I say about price to earnings ratio? The closer the price to earnings ratio is to 1, cheaper it is. So, NEM looks to be a cheap stock the way things are at 1.5 x, and so dividend yield currently is about 7%. Not so good. Maybe that's why it's this cheap, because dividend yield these days tend to be above 10%. Dividend yield is essentially the dividend per share divided by the price. Now, the next stock on my radar is Custodian and Allied. So, Custodian Insurance, essentially, perhaps the largest insurance group in Nigeria. Share price is 12 naira 60 kobo per share. In terms of their fundamentals, price to earnings ratio is 1.46, even cheaper than NEM Insurance. Earnings per share at 8 naira 77 kobo. So another very cheap stock out there for you. And of course, you also have Coronation Insurance. Coronation Insurance share price is 1 naira 4 kobo per share, which essentially puts it in the penny stock range. But in terms of the price to earnings ratio, see, I always say that it's 2.29, which means it's even more expensive than Custodian and NEM that are priced at about 8 naira and 12 naira, 12 naira, 8 naira respectively. So the next stock here is ICO Insurance. ICO Insurance, another penny stock at 1 naira 25 per share. I think I can have ICO in my portfolio. Yeah, I don't have to check that. I've not been doing that well. However, it did gain 5.9% last week. Fundamentally, in terms of the price to earnings ratio, it's also pretty expensive. One of the most expensive out there, 2.43 times is earnings per share of 0.5 x. And then last but definitely not least is Mansard Insurance, trading at 2.2x. Currently, share price is at 7.2 naira per share. So those are my 5 stock picks for the week from the insurance sector. If you want to know more about it, you want to check us out on our any of our social media channels at Nairametrics. Watch out for my YouTube video this week. I'm going to break it down more economic terms. This has been Follow the Money, brought to you by Nairametrics. I remain Ogudre. Until we do this again next week, do have a profitable week ahead. Bye.